Hello, everyone. Ladislas Maurice from thewanderinginvestor.com. So today I am with Tim Stermos of the African Alliance Fund, and we'll be discussing African stocks. How are you, Tim?
Very well, thanks, Ladislas.
We're going to start off with a quick recap for 2021, and then we'll go into 2022 and explore some of the catalysts for African stock markets and some of the risks. So tell me about 2021. How did it go? How did the markets do?
It was generally a solid year for most markets. But companies we own in those countries, we own MTN Ghana, the main mobile phone carrier there. It's actually nothing to do with the pandemic that's been ailing that company recently. After a great sort of first half of the year, there was a money grab, which often happens. We saw the same thing here in Tanzania. The government decided, why don't we put in a levy on mobile money payments? Easy way to grab some money. Parliament has been debating this. It was a proposed levy of 1.75%, which is quite high. But there was even fisticuffs. The debate got so heated that they were actually throwing punches at each other. So debate was resuming on the issue this week. I haven't had any word yet. One of my broker contacts sent me an email about it yesterday saying she had a close eye on it. But we think probably they come in and introduce something, but at a much lower rate. But the stock has sold off a bit because of that. And we've actually been adding to our position because longer term, we think it's still a great story. And in Rwanda, curfews and so on didn't really affect the Braliawa, the beer company that we own there, beer and soft drinks. They moved a lot of their business to what's called off premises. So mostly in Africa, people tend to buy soft drinks and beers sort of on the spur of the moment, or they go out to a bar or a restaurant. And a lot of the trade formerly was that way. You don't go to the supermarket and buy, a week's worth of groceries and put it in the cabinet or the fridge. You buy it as you want to consume it. They were able to bring experience in other markets to bear. It's a subsidiary of Heineken. So when the pandemic hit and this on-premise business kind of evaporated, they quickly completely retooled their business and they actually sell a lot now to mom and pop stores and supermarkets and things. So business was actually really good for Braliawa last year in Rwanda. So all in all, the fund had a very positive year. For the calendar year, we were up just over 16%. Pretty much across the board, there wasn't any market that performed particularly badly for us. Kenya was very slow. We own a few companies there. They kind of just treaded water. We have one position in Nigeria, same thing, kind of treaded water. But other stocks, other companies around the place have done very well. And here in Tanzania, we've built up quite significant positions in three of the big blue chips, one of which is now starting to move considerably higher. I'm bullish going into 2022.
So why are you bullish for 2022? What are the catalysts that are making you bullish?
Several things. Obviously, sort of the pandemic policies winding down, even in the stricter countries. So that's hopefully in the rearview mirror, although with this thing, you never know. But the banking sector in particular, 2020 was a horrible year for them because they took a lot of losses because of exposure to businesses that were affected by lockdowns. So they took that hit. But in addition to that, they also took large provisions in case of that continuing in 2021, 2022 and onwards. And it didn't really happen. So the banks, they took smaller provisions than in 2020, which meant that the earnings look great when you do a year-on-year comparison. But I think 2022 will be even better for a lot of the banks that we own. Some of them are even looking at writing back provisions that they took, because they over-provision. So that's one kind of technical, non-macro thing, I suppose, that makes me bullish on what we own. But if you take a broader view, commodity markets are doing very well. Oil and energy prices are doing very well. This is great for most African economies because of their bias towards commodity exports. It means that there's greater export earnings coming into the system and liquidity thus picking up. Zambia is a great example of that, with copper prices doing very well. Zambia was in the wars for many years, not literally, but figuratively speaking, with the terrible exchange rate and too much debt owed to the Chinese and this and that. But now that copper prices have bounced back strongly, money is really rolling in. And, that helps the entire economy because there's more money going around and there's a multiplier effect from that. Same with oil prices and coffee prices and avocado prices in Kenya and the whole commodity complex, both agricultural and energy and mining. it's doing well, which is good for Africa. In addition to that, most markets are seeing interest rates easing slightly. Is always positive from a valuation standpoint and also from a credit growth perspective. Inflation is a big problem now in the West. Africa never had the same situation where there was disinflation or even deflation. Inflation has been modest in a lot of the markets where we're concentrated with our investments, but it's anything but runaway now. I mean, it's ticked up slightly, but it's still, I mean, it's lower than in the West. So you got 15% interest rates and 4% inflation here in Tanzania, for example. So you get an 11% real rate. In the US, inflation is 7% and interest rates are nothing. So it's a case of the brush that people used to tar the African markets with. It applies in the Western markets now, so on a relative basis too. And it doesn't take much money to flow out of developed markets into emerging and frontier markets to move the needle, especially these frontier markets here in Africa where we're investing. There's just so little capital from the rest of the world here at the moment that even a slight shift in the wind can really make a difference. So those are some of the reasons why I'm constructively bullish on the markets generally.
I mean, we saw it last time around when there was a commodities bull market in the early 2010s. African stock markets were doing very well. But one of the risks I see is food prices are rising. Because when we look at the structure of these economies, typically there are these mining companies, oil companies, etc. They don't necessarily employ that many people, but what they do is they give quite a lot of money to government, essentially through taxes. And then the government invests and redistributes parts of it. But what we're also seeing is that food prices are rising heavily across the world, and this will impact lower income Africans very heavily. And they're not necessarily getting much benefit from rising government revenues. How do you think this is going to play out?
Yeah, I mean, it depends very much on which particular countries you're talking about. There is a shocking number of Sub-Saharan African countries that are not self-sufficient in food. In fact, that's the rule rather than the exception, which is really disturbing given that there's lots of arable land and there's plenty of people to work it. But a country such as Tanzania, for example, is one of the few. It's the opposite. Like there's a food surplus here. One of the trends last year was actually that Tanzania was exporting a lot of basic food crops to neighboring countries like Kenya, Uganda, Rwanda. So they've been doing well. The trade balance has gone in their favor. So I guess some of the other countries, they're mitigating the tendency for prices to rise by importing, which happens to benefit Tanzania. But for other countries, yes, the people that are doing it tough, they're probably going to be doing it tougher in terms of food and energy costs, which are a large percentage of the family budget. Governments, they will collect more revenue from export, cash crops and commodities and so on. Does it filter down? Not to the extent it should, you're quite right. But in terms of, the specific companies that we own or that are investable, it's not really that big a deal for most of them because they're involved in things like cement, or they're catering to the wealthier classes. And obviously, if food prices are rising for consumers, then that's probably good for producers here in Tanzania. So I'm kind of seeing that as an advantage rather than a disadvantage in a way. Although it depends whether it's input related or not. If it's fertilizer costs going up and energy costs going up and the cost of production also increasing, then that can be a problem. But it depends a lot on which particular market that you're talking about. Of course, where you get problems and where there's big risks, if it gets really bad and people can't feed their families and they start rioting, that's obviously a risk that always has to be kept in mind. And we see that in places like North Africa, the Middle East from time to time. When we do well, we always wonder, well, what's going to come out of left field and whack us over the head? It's very much that way here.
And something will, for sure.
Oh yeah, whether it's nature related or government related. This mobile money levy in Ghana, for example, there was also a talk of a capital gains tax on foreign investors being introduced in Nigeria, 10% capital gains tax. So that
smart
comes out of the blue. So those sorts of things we always have an eye out for.
So tell me, Tim, are you going to make some changes in terms of your geographic allocation, taking into account the fact that the price of oil has been rising and is likely to continue rising? Will you increase your fund's exposure to countries like Angola or start venturing a bit more into Nigeria? Or is it a bit too early in the sense that these economies still have essentially a lot of debt in the system and they need to pay back people before they can really start benefiting from it? Like, how are you trying
Yeah,
to balance this?
there are so many other risks in a place like Nigeria that the energy issue is really a secondary thing when I'm looking at allocating capital. I just talked about this possible capital gains tax imposition, the fighting between the regions, the federal nature of the political system there,
But I
elections
mean,
coming up, all sorts of stuff. Now, high oil prices can fix a lot of things, but it
just
hasn't come through yet. That's one of the things I would say. Angola is not really investable. There's some Portuguese listed companies that have significant business in Angola, but Angola itself doesn't have a functioning stock market as yet that foreign investors can participate in. So Zambia, I mentioned earlier, that's actually one where I am looking at investing because of the change in government there and the greater exchange rate stability driven by higher copper prices. It's not energy prices directly. The rise in oil prices, it does have, and natural gas for that matter, it does have me looking at oil and gas stocks that operate in Africa but are listed elsewhere. I've started doing some research on those, and also mining companies that are in that situation. It hasn't been a traditional focus of the fund, because our fund was set up with the idea of buying African blue chip companies that supply, essential goods for Africans in Africa, which is a little bit different to the traditional sort of fund that was buying mining stocks or oil stocks or whatever that operate in Africa, but might be listed in London or Sydney or Toronto quite typically. But I think there is a place for those kinds of investments. Also precious metals companies. I think there's a lot of value there. I do own some Zimplats, which is a platinum and palladium miner in Zimbabwe that's listed in Australia. It's a Guernsey incorporated company. And
but
it's
not
still
the
trading.
fund. You own it, but not the fund.
Well, yes, I have an investment company in Australia that owns it, but we're looking at picking up some possibly for the fund as well, because it's trading on like a 3.5 times or 4 times earnings multiple, and paid out a double-digit yield last year. It's US dollar earner, operates in Zimbabwe. They've just committed to a large capital expansion, so they're obviously comfortable with the long-term future in Zimbabwe. It's one of these, I guess, anomalous companies that, they're such a big part of the Zimbabwe economy that the government's friendly and, cozies up with them. And because it's a symbiotic relationship, if Zimplats does well. So the other thing about it is there has been part of the company has been given to Zimbabwe nationals. So the whole country has a stake in the company doing well, essentially. And
I
they've been
mean,
operating for 20 years. So
I mean,
it's
Zimbabwe did well when the farmers did well, but that didn't stop the government from kicking them out. So
yeah, well, it's always a risk. But I've been following this company since 2002.
let's go back to Nigeria for a minute. Yeah, there are all these ethnic issues in the country. At the end of the day, when there's money running in the system, people tend to fight a lot less because there's enough money to keep everyone
Right.
happy.
Exactly.
So, like, I understand that Nigeria is extremely cyclical. I mean, generally, Africa as a whole is pretty cyclical, but Nigeria is just next level when it comes to that
Mhm.
aspect. So you're saying you're not looking to increase the fund's exposure to Nigeria in 2022? Because sure,
Not
10% capital gains
particularly.
tax, but
It's
10% of
it's
something is better than 10% of nothing.
sure. No, the main issue, and I've written extensively about this, the main issue at the moment with Nigeria is as a foreign fund, if you put your money in, you can't get your money out. You go to the back of the queue, and there's a lineup at the central bank to get foreign exchange. They ration out foreign exchange. So it's essentially the case that if you go in, you've got to be prepared to stay in forever. Obviously, things will change and the exchange rate regime will change, and rising oil revenues can certainly help that. But as a fiduciary, it's hard for me to put my investors' money into a country where I don't have a guarantee of being able to get it out again. That's the problem. Now, there are some ways around that. You could get exposure by buying Nigerian GDRs, Global Depository Receipts, which are listed in London, but the liquidity and the selection is very limited. There's also a Nigerian ETF that trades in the United States, which I've also written about. The ticker is NGE. That is also an interesting one because they can't get their money out. If they're paid a dividend, often there's no hard currency to pay the dividend, so they have to reinvest it. But the interesting thing about it is that it trades at a significant discount to the underlying value of the security basket that it owns, because the market is already pricing in a large devaluation of the Nigerian naira.
What about Senegal? Because Senegal is going to start producing a lot of gas.
Yes.
They had a few issues in the last few years with some protests, etc. But then again, it was relatively minor. Over the last 2 decades, Senegal has done really well.
Yeah,
and now there is going to be cash coming in. Correct. A lot of cash.
Yeah, Senegal is definitely one of our top picks in West Africa, along with Ghana. And we do have a substantial investment in Sonatel, which is the leading mobile phone company there, which is a subsidiary of Orange out of France. And we have been adding to our position in Sonatel. And it's still trading at very reasonable valuations. Last year, we collected a double-digit dividend yield. So we're very comfortable there.
Double-digit dividend yield.
Yeah. And we think that
and the P ratio roughly right now?
Single digits.
Cool.
And most importantly, what I look at is companies that are generating decent returns on capital. Here in Africa, if you can get 15% in government bonds, and some markets you can, others are closer to sort of 10%. You really want to be getting twice or 3 times that on your equity investments, or the company that you invest in should be generating to account for the risks. So Sonatel has a return on invested capital in the high 20s, and you can buy it at less than 2 times book value. Uganda is an interesting one too. It's not known for oil, but there's a huge oil development coming online in Uganda. There's actually a pipeline being built from Western Uganda all the way to the Tanga port here in northern Tanzania. So Uganda also will be seeing oil revenues starting to explode over the coming years.
Good.
And it's difficult to get a direct exposure to that, but we own the biggest bank in Uganda, which is completely dominant, and they see a lot of new business. Already they're lending to this oil pipeline company.
Or the beer company. Typically beer and oil go well together.
Yeah. Ugandan beer company, unfortunately, you can't invest directly. There's a thing called Nile Breweries, which is privately held, or it's part of the AB InBev group, same as Tanzania Breweries. It's actually managed out of Tanzania, but it's privately held. And then EABL, the big Kenyan brewer, they also have significant Ugandan business. But I'm not comfortable with EABL because of the debt levels on their balance sheet. We're stuck with banking only at the moment in Uganda, but MTN, the mobile phone company, also recently listed their Ugandan subsidiary, MTN Uganda. And I was not prepared to pay the price that they asked at the IPO, 200 Ugandan shillings. And turns out I was smart not to, because it's now offered at about 185, 184. I'm waiting for it to come down a little bit more, and then we may step up to the plate and consider buying. It's on about a 13 times historical earnings multiple, which is fair, but it's not cheap. We like to buy cheap. And when we compare it with MTN Ghana, which is their sister company over in Ghana, it's trading on only about 8.5, 9 times. So you can see, if I have capital to allocate, am I going to buy more MTN Ghana or am I going to buy MTN Uganda? Well, at the moment, it's buy more MTN Ghana, which is exactly what we're doing. We actually have an order in with the brokers that's being filled ever so slowly on MTN Ghana. We got some more yesterday. They just emailed me earlier about the balance, and I said, yep, keep buying. We have our eye on a few things, including MTN Uganda, but we haven't pulled the trigger yet. Also one in Zambia. There, the bottleneck has been setting up a custody account. There's always fun and games in these frontier markets. My broker has been working on that since mid-December, and they think it's going to be done by Friday. Luckily, the seller is very patient, and I think we still have a deal for them to sell the line of stock that we want.
Sounds as problematic as opening a Swiss bank account nowadays.
Oh, yes.
Fantastic. Tim, thank you very much. So full disclosure, I invested in Tim's African Alliance Fund. I am bullish. I may add to my position this year. And what I really recommend people do is sign up to Tim's newsletter. So as he travels around Africa and looks at investment opportunities, he's got this great newsletter with notes from the ground, essentially. So there is a link below. Tim, thank you very much for your time today. I really appreciate it. And all the best for 2022.
No worries. I think we'll have a good year ahead. Thanks again for spreading the word and your investment. Thanks, Ladislas.
Cheers.